It could also be, for instance, not that I think this, but certainly maybe 5 years from now, Doge disappears.
Yeah. Hmm.
Now,
Possible.
I don't know. I don't expect it to. It serves its purpose. People like to have fun. Human beings, once you've lived long enough, you realize human beings aren't rational
Yeah.
all the time.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands, such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services, such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services, such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Dan Tapiero, who's the founder and CEO of 10T Holdings and One Roundtable. Dan, great to have you back on.
Oh, great to be here. I realized from what you just said before that the last time I was here was September of 21, which of course was near the peak. I pretty much can guarantee, well, I have a very strong feeling that we are not near the peak this time. So,
For sure.
which is a good omen. Lots of good things coming.
For sure. So Dan, on that note, since we last spoken, the Bitcoin ETFs have, of course, been launched. Many Wall Street firms have issued ETF spot ETFs, and we've seen amazing inflows and performance. Have you been blown away by the performance, or were you expecting this? Were you hearing and seeing the demand prior to the ETF launch?
Well, in this space, as you know, whatever your expectations are, they usually get blown away on the upside and then sometimes on the downside as well.
Sure.
But I think that, look, for a very long time, people understood that having an ETF would increase the rate of adoption. And no matter how much OG Bitcoiners hope and think, and people who've been in the space for a while, it's hard to onboard a lot of people, with self-custody. It's hard to onboard a lot of people, even through Coinbase, right? Which you would think would be easy. And so for at least Americans, and certainly Americans that have accounts with the large wealth managers, they all have stock accounts and they love seeing their equity exposure, their asset exposure, in one place, overseen by one person, a financial advisor. Again, these are generally older people as well. I sort of think about the 50 and over, crowd. I think many of the 35-year-old and younger, they don't have wealth management accounts. They have, maybe they have E-Trade or, but they're also more facile. And I think digital native, and setting up a Coinbase account is a second thought, right? It's very easy, very easy to do, and they would do it, I think, without any restraint or constraint. But older people just have a really hard time trusting Bitcoin, trusting the space, trusting younger people. I mean, we can say whatever it is. And for them to have an ETF, just like they have a bond ETF, a gold ETF, was the way that they were going to be onboarded. So, I don't think anyone expected it to be this big. But if you did the math and you looked at things and you figured there are $100 trillion of assets sitting in equity accounts around the world, and and maybe more, not too hard to say, well, if 0.1% comes into this Bitcoin ETF, what does that mean, right?
Mm.
So I think the math behind the numbers was suggesting quite a robust impact. But you never know until right? Until it happens.
So Dan, do you
So
think Bitcoin and crypto have become ubiquitous where now we are in the financial markets because of these ETFs? There's penetration in pop culture and society and in the political realm. It's affecting elections. The Congress is working on regulations. It seems it's everywhere now.
it's very early in that. I mean, yes and no. It's on CNBC, every day or every other day. People talk about it, but that doesn't necessarily mean people are actually buying it and owning it. I think it's the beginning of that broader adoption, but I still speak to many people. Again, it tends to be older people who don't really want to have anything to do with it. And didn't we just see this week that woman from Goldman Sachs came out and basically said, no way, right? What did she say? There's no chance that it's an asset or something crazy like that, right?
Yeah.
Yeah. So I think that's still out there. I would suspect 3 to 5 years from now, that's not going to be out there anymore.
So why do you think you have these laggards, even the well-informed folks who understand markets and commodities and so forth, your Vanguards, your Goldman Sachs folks, where they are still like, we don't like this, but eventually, like you're saying, they will capitulate because their goal is to make money and make profits and so forth. What are your thoughts? Why there's still this
Well, I
skepticism?
just think it's human nature. This is the way the adoption of all sorts of things happens, slowly and then all at once. If you think about it, I remember in the late 90s, people used to worry about putting their credit card information
Hmm.
on the online, right? And that lasted years.
Sure.
So, I just think it's human nature, and the people who have been early just keep saying to themselves, well, how is it that I am early and the great Goldman Sachs is not? Like, how does that make any sense? And then you start to question yourself, right?
Yeah.
I frankly think that, look, you've got to do the work. It always comes back to this. You get paid for doing the work. And it's just very difficult. It's hard if you haven't experienced it before. I mean, the positive action in the markets to one's benefit, right? Like, you've done the work yourself, and you think, well, I'm not quite as smart as Goldman Sachs, and they have all those resources. Why don't they see it? It's just that they have a lot of other things on their plate. There are a lot of other assets. No one's really taken the time. And it takes a lot of time, as we all know. It took me quite a long time to get over the hump of understanding sort of the basics of the Satoshi white paper, understanding what a proof of work algorithm was, understanding also that there's a lot of garbage in the space. There's a lot of noise. There are bad actors. I was saying to somebody the other day that sort of like, the rush west to find gold in California in 1849. Think about those old early gold prospectors. Some of them became fantastically wealthy. A lot of them failed. And there were a lot of like hustlers and fraudsters and, people on the edge there trying to, find gold, make a new life for themselves. I sort of feel like it's the same thing here. And if you're in the traditional world, you're saying, well, I don't really trust that group of people, right? That doesn't quite make sense to me. Those aren't people who I want to, go out and have a drink with or whatever it is. So there are all these natural human barriers. And it's like that with any new development, I would say, technology. Or imagine gold, think about that in 1849, or the big silver find up north in, what was it, the Comstock find in the early 1870s. You had people essentially, overnight becoming multi-billionaires because they had found this tremendous silver vein. And it's sort of that way a little bit here, right? There are people who just recently, in the last few years, went from nothing to having significant wealth built in the space. And so the speed and newness of it, and the fact that it somehow doesn't make sense to us, right? Like, we all think you've got to toil to work, years and years before building up, a little nest egg, and then you invest that, and then maybe that works out. And this is a whole new paradigm and frame.
Absolutely. And, I've often heard, which a friend of yours, which Raoul Pal, talk about
Sure.
Metcalfe's law and network effects. And
Yeah.
and it's the dynamic that the internet brings, because he often shares the example of Facebook, where you're participating in a social network, but for the first time you can be part of a network and sharing the benefits financially. And there's a bit of that happening, and that dynamic is still new to a lot of people, it seems like. What are your thoughts on that?
It's a great point. I mean, it's absolutely new. I mean, most people think of business as, net profit. Are you making money or are you not? At what rate are you making money? There's supply and demand. And that doesn't really exist in a way in our space. Metcalfe's law really is the driver. And the network effect is very powerful. I mean, we saw, look, Twitter, a perfect example, X being worth 30, 40, 50 billion dollars with no profit at all, right? And it's because there is an idea that I think is valid, that if the product is really something that people are engaged with, they need, eventually they'll pay for it. We'll all pay $8 a year for Twitter, but it's building that network where there's the value. And so that was very important for me also in understanding Bitcoin also, was that Twitter could have hundreds of millions of people engaged and not charge them. And then all of a sudden, have a company, the equity of the company worth quite a lot. And the Bitcoin network sort of works that way. I think, there are many more benefits, of course. And,
Sure.
It is the, most secure network probably of all time, impenetrable, and an incredible, savings technology. So, I mean, there are many, many uses and many different value attributions.
How do you personally view it? Because, and the reason why I'm asking this question is, we've often seen, even on the media pundits, right? They'll often say, "What is Bitcoin?" or "What do you use it for?" But then, as I've been thinking about this globally, it's different things to different people. Like, store of value, some people use it as a currency, not everybody, but some. You read a Lightning Network. And then, that store of value, but also a hedge against what's happening in the fiat world. How do you personally look at it? And what do you think is the leading use case?
So, like, I talked to Pomp about this, and he mentioned it just the other day when I was doing that interview with him in New York. It's actually akin to gold a little bit. Gold is one of these assets that many people own it for different reasons. And I know the Bitcoiners, there's this rivalry between the gold and the Bitcoin, or I don't even know why Bitcoin's outperformed dramatically. But,
Right.
Many people in the old world, they use gold as a hedge for their equity position. Some people use it for an inflation hedge. Some use it as a proxy, a liquidity proxy. Some like owning physical gold, so there's geographic hedge component to it as well. Many, like, many different reasons, and certainly more than I would say an individual stock or stocks generally, and bonds, of course. So it's a multi-pronged asset, and Bitcoin, of course, is the same. I think, but there are many more things that give it its value. I think at its root, it is the digitization of money and value, or it provides the network for that. Code is the basis for the digitization of all value. So that, to me, is a very big concept. I see all the other things as well, but I don't know that I would. So I wouldn't necessarily spend Bitcoin on anything, and I think that's an interesting, maybe new development in a way, because anyone who spent their Bitcoin has regretted it. So I actually think your Bitcoin is not meant to be spent. It is meant to be held in a way like gold. It's meant to be the best, highest form of collateral. And a new, Saylor always talks about this new savings technology. It's a way for people to guarantee against, debasement in the external world, the non-digital asset ecosystem world. And so I see it as that, but that's my investor perspective, right? El Salvador, the central bank sees it, has a slightly different, use and value. And individuals who live in emerging places where their currencies are collapsing, like Turkey, Nigeria, they see it as a hedge against bad monetary and fiscal policy. So again, lots of different. It's also, it also trades a little bit with liquidity in the old world, when liquidity is plentiful. But I think there's so many different things going on. I actually think that all of these other, so Bitcoin and Ethereum for me are the core assets of the digital asset ecosystem. And then you have all these other chains that are, in my mind, venture projects. But I do believe, it's funny because I said the other day, I'm a Bitcoin maximalist, but I'm also a believer in this multi-chain world. Right. And that is because I believe that your Bitcoin really should not be spent and should be put away. And I wouldn't stake it. I wouldn't anything. It's on a ledger and it's put in a safe and you don't think about it and it's away. So if that's the case, then all these different chains, which have sort of spliced the code and focused on a specific use case, they can have value. I think that usage can happen with other cryptocurrencies. It's just because, in my view, Bitcoin should not be plentiful. People, in theory, eventually, if everyone thought like I did, there wouldn't be any Bitcoin. It would just be put away on ledgers, in vaults. And so if it's just put away, then it doesn't exist. Yeah, the float is very low, but it really becomes this ultimate store of value. And in terms of use case, and I know the VCs and the technologists and all the people, the developers in the space, who are all fascinated with developing products on top. Now we have layer 2s, we have layer 0 as well. I think that there is a place for the exchange of value that isn't the ultimate store of value, which would be Bitcoin, right? So NFTs, I think, are valid. Someone like maybe Saylor would say, no, NFTs are all going to zero. I don't believe that. I think that digital art, as represented on non-fungible tokens, will have value in the future. Stable coins are very important for a big chunk of the ecosystem. The world of DeFi is expanding now. I mean, it was 50 billion TBL, now we're over 100. That's a lot, 100 billion in TBL. A lot of people believe in that. It's not just that it's developed network effect, but it's had some staying power. So you have all these different things. Now we have RWAs, real world assets, tokenization of real world assets. I think it's very early in that process, but that's another interesting use. So as we move towards this world where all value eventually sits on a blockchain, is tokenized, all sits on a blockchain somewhere, it doesn't have to be that Bitcoin is that used in that process, right? If you take, and this is a long-winded answer, I'm sorry, but like you asked me, where do I see Bitcoin's value derived from? It's from the idea that it is perfect, pure collateral. But if you take that out a few steps, if you really believe that, like me, you don't use it, you don't stake it, you don't, necessarily, use to build on top of. I mean, I think it's great that there are now layer twos and stacks is gaining momentum. I think that's fantastic. Ordinals, I think it's great. It's just not for me.
Yeah.
Right. And for the way that I see this world developing. So I have a sort of a slightly different view, I think, than people out there. I just have the Bitcoin put away. And then I see this whole digital asset ecosystem growing up because there are things of value that don't need the intense security function that Bitcoin performs. Bitcoin is, impregnable. I mean, the network can never be hacked. It cannot be hacked. It is, 100% guaranteed. It's yours. You own it, etc. Some of these other, cryptocurrencies have had problems and have faded away. Other ones have had problems and fixed their problems. But if everything of value is going to be tokenized, it has to mean that that our world is a multi-chain world, right? And I mentioned those things: stable coins, NFTs, DeFi, RWAs. I don't think all of that, blockchain gaming, all of the tokens associated with that, I don't think all that sits on Bitcoin, right? So that's a long-winded answer, but
no, and I appreciate that perspective. But as you're saying that, I'm also thinking, is this truly because of the decentralized nature of it, where to you it means something different than it would be to the guys at Stacks or to someone in another part of the world, but because of the decentralized nature, it's what you want to do with it, in a way.
yeah,
Right?
yeah. I mean, it can't be absolutely anything,
Right.
but as long as it continues to serve the purpose that I think it should, then I stay with it that way, right? I think they're probably, I mean, it's strange to say you're a Bitcoin maximalist, but then you're also a believer in the multi-chain world, right?
Right.
But
Well, you're not an
right.
extremist, maybe.
What's that?
You're not an extremist.
No, I'm not an extremist, right? Like it's not Bitcoin and everything else goes to zero. I
Right.
don't see that. And I think that the especially Ethereum, which has been in existence now over 9 years, has developed network effect. I think is a core asset. And now, maybe Solana is transitioning from a venture project to a core asset. I don't really have a strong view on that. I mean, it could be. I don't know. But it could be that the people out there see other assets as pure collateral. Like today, for me, it's just Bitcoin and Ethereum. But for other people, they may say, well, Ripple has been around for over 10 years. The XRP was trading at like a fraction of a penny 8, 9 years ago. It's now at 60 cents. The thing is $30 billion, I think, of value. Maybe that's a cheap network effect, right? It hasn't for me. I mean, I wouldn't replace my Bitcoin with XRP,
Sure.
but maybe there are people out there who believe that. And there's a case to be made. It's not decentralized in the way that I would like. I mean, Bitcoin, again, is the perfect collateral because, and I also really believe in the proof of work concept. Proof of stake is, okay, I get less energy intensive, but it's not as pure as proof of work. So, people just have different views. Some of the Ethereum people think Bitcoin's just old tech.
Yeah.
Okay, well, then that can be their view. And I think that after a certain amount of time, after there's community buy-in, after people, after the asset has been established for 10 years, that's a pretty long period of time for an asset to go from under 100 million in value to 30 billion in the case of XRP. I don't know what that is, but it's impressive. And I think it's hard to deny it. On the other hand, you have assets like Litecoin that I don't understand at all. Now, it still has $5 billion of value there.
Right.
So people are believing in it. I don't know what Litecoin, is used for, or I don't know much about their community or whatever it is. But the reality is it's been around a long time and it's not zero. So I don't get that, but you can't get everything. So.
Right. But then is it the human aspect that's happening here where, and it goes back to why folks at Goldman Sachs and so where they see meme coins. But that is just symptomatic of human nature and over speculation. And it's easier to speculate now because you had meme stocks, now you have meme coins. And to your point, the network effects, because people are behind it, this movement, it's crowdsourced, and they're putting capital into it. It doesn't even have to do anything and it has value, right?
Right. And look, some of those things will survive. I mean, Dogecoin has, outperformed everyone's expectations massively. And it has huge, market value. I'm looking here. Dogecoin is at 26 billion. And Dogecoin's been around a long time.
Yeah.
So, again, I don't know necessarily what that means. Does it mean that people feel comfortable storing value in Doge? I think Dogecoin is proof of work, right? I think it is. So maybe that has value for people. I don't know. A whole Doge community, you can buy and sell things in Doge. It could also be, for instance, not that I think this, but certainly maybe 5 years from now, Doge disappears.
Yeah.
Now,
Possibly.
I don't know. I don't expect it to. It serves its purpose. People like to have fun. Human beings, once you've lived long enough, you realize human beings aren't rational all the time. They do silly things sometimes. People like to have fun, right? Think about it. Music, entertainment, sports. leisure, those things are not necessarily guided by any specific principle,
Yeah.
right? There's no business principle. You either like playing golf or you don't, right? I tried for a while playing golf. I wasn't very good, so I don't play golf, right? But there are golfers who will spend tens of thousands of dollars, hundreds of thousands of dollars a year on golf.
Mhm.
And I may say, oh my goodness, hundreds of thousands a year on golf and memberships and playing, 3, 4 times a week. And it's not for me to say, oh, well, that's silly. No, they like golf and that's what they do. And that's great for them.
So,
And it's sort of similar, like the Doge guys, they want to own Doge because maybe they're in Doge chat groups and they get together and wear Doge t-shirts. And maybe I have no idea. Okay. But the proof is in the pudding, right? The reality is Doge has been around for over 10 years, right? It's over 10 years now. And it's worth $26 billion
yeah.
to a community of people all around the world. So it just shows.
So Dan,
Yeah.
is it, as you're saying that, you're just all these thoughts are coming. The steam engine here is running. Is it culture coming to the blockchain? You're taking meme
Yeah.
culture. You're taking jokes. There could be a golf coin, like you were saying before, right? Which
Well,
things like
I,
that.
yeah, I think it is culture, but it's the culture of younger people and a new generation.
Hmm.
It's not the culture of 65 and older people who happen to control most of the wealth at the moment,
Sure.
right? It's the culture of, this younger generation and the older generation. And this happens all the time throughout history. The older generation doesn't understand it at all. They're like, this is crazy. We didn't grow up with this. My guess is the age distribution of Dogecoin skews way young,
Yeah, for sure.
way young. 90% have got to be under 35 or 98% or something. Elon is, maybe he's the old guy in the Doge world, but look at Elon and look at what he's done on Twitter. And the guy is, he's clearly the greatest entrepreneur of my generation. There's no question.
Yeah.
He runs 7 businesses, owns vast chunks of those businesses. They're performing, for the most part, as far as I can tell from the outside, well. And he thinks it's pretty darn funny to be involved with Doge. All right. And so, his time is worth XYZ amount. And he's decided that a certain percentage of his time should be for fun. And so for him, playing around in Doge is fun, right? Some of those silly meme things he puts on X, that's fun for him, right? He's got his little body things too. He's like, that's fun for me. So it's not his whole life. And no one really decides, what is specifically fun for him. He's deciding. So I do think that it's a new way. To express the value maybe of the time that you spend doing things you like, right? It's not all 100% business. You see what I'm saying?
I'm in full agreement with you. Look, I'm not on the meme coin train. I'm Bitcoin and some other altcoins, but it has to have practicality to me, utility, real world application. But I'm not, like we were saying, it's fascinating what's happening and the dynamic and the change in human beings. But I did want to ask you about the ETFs as we continue this cycle. Do you expect these type of inflows to continue this performance as RIAs and wealth managers get educated about Bitcoin?
Yeah.
And do you have a price prediction for Bitcoin this cycle?
Yeah, I mean, I do think it'll continue. It's only the very first inning. I mean, it just started. Some of these firms haven't even started selling a product.
Mm.
So, and I've been saying, I think this cycle easily can be somewhere between 2 and 300,000.
Mm.
Now, it's not very impressive from here. It's only a triple or something. But if you look at the last cycle, we peaked in 2017 at 20,000. And then the next peak was like 60,000. So 3x, and the next peak would be 180, a minimum. And then if you look at the bottom, the same thing. The bottom in 2019 was around 3,000, went to 60. So that was 20x. The bottom for Bitcoin this time around 15,000. So 20x would be about 300,000.
Mm.
So I think somewhere between 2 and 300 kind of makes sense.
Uh,
I've thought for a long time that at the very least, the digital asset ecosystem, so that's Bitcoin, Ethereum, all the cryptocurrencies, and all of the companies, the value of the equity in the space should be worth at least 10 trillion. That's why I named my fund in Inception 10T. It stands for 10 trillion because the space was worth 300 billion, and I thought we could 30x. And so that was my, not obviously, but I think that's going to be too low a number. I mean, when in 2019, there were really no NFTs, there was no DeFi, there were really no stable coins, there were no RWAs. I mean, on and on. There were no ordinals. So I always thought that this digital asset ecosystem would grow and develop because I'd always had this bigger view about this multi-chain world where all things of value are being held.
mm.
And so I suspect that 3 years from now, there will be many, or at least several areas that develop and grow that we're not even aware of, that don't even exist today.
Mm.
And that's really the fascinating thing about this space, is that the innovation is at a pace that's, I don't think certainly I haven't seen before. And in the financial world, I don't think we've ever seen.
Right.
So yeah, it's very exciting. I tell, anyone under 30 who's interested in business or finance or money should be in this space. Like
Mm.
I don't know why people are still doing internship programs at, investment banks. I mean, like that was a thing in the 80s and 90s.
Right.
I mean, maybe it's good experience learning, but this is the future here.
Mm. Dan, I want to get your thoughts on the Ethereum ETF. We have a lot of problems with the SEC right now, right? Congress has not acted. SEC is going crazy. They're running amok. Uh, there's talks of they might try to block this Ethereum ETF. What do you think are the chances of an approval this year or possibly next year?
Well, it took, what was it, 11 years for the Bitcoin ETF to get approved. So that Bitcoin did a lot of the hard lifting.
Mm.
You can't really put a time frame on this, unfortunately, but I think the Ethereum ETF will get approved. I don't really see, like, I don't really have much doubt. I just don't know when. It's just the natural progression of things. Um, you know, that's my view. I think eventually, look, Larry Fink, who's been really spearheading this whole thing at BlackRock, he said he's going to have an Ethereum ETF, right? So he said he was going to have a Bitcoin ETF, and it happened. I'm pretty confident. I think that he'll get things done.
Do you think we'll have to beat Gensler in the court again? To get called
I don't know. I
arbitration?
think uh, Gensler's existence. I mean, his time at the SEC is probably limited.
Mm.
We have a new administration probably coming in. Uh, he'll be out. I just think. every 4 years we get to cleanse ourselves of some of the problems of the previous 4 years. I think I don't, I haven't read or heard of anybody who's actually happy with his performance. So I think, have you? I mean, even
Only
outside the big,
Elizabeth Warren, maybe.
yeah, but she's not relevant.
Yeah,
I think people really, especially non-Americans, they keep mentioning her, but I don't know that anyone takes her seriously
no,
in either party. So I don't see how she's relevant.
for sure. And what we're seeing, Dan, even on Super Tuesday, crypto's impact on the elections. It's not the top ballot issue, obviously, but pro crypto candidates are winning. And then you see candidates who are running for president. And this was earlier in the cycle, but the Republican candidates were many coming out talking about being pro crypto, what they would do if they became president. RFK Jr. just a couple of days ago put out a video, bashing the Biden administration. Um, do you see this trend growing where as more Americans and people start owning crypto, it's going to be an issue because they're like,
Yeah,
why are
it
you
just has
attacking this thing
to.
that I invested in?
Yeah, it just has to. It's slow because I think it's in a way a passing of the torch from one generation to the next.
Mm.
And the more younger people that have the ability to vote, the greater the influence is. And also the wealthier that and the larger that the space becomes and the wealthier that the people in the space become, the greater impact they'll have. I mean, 8 years ago, the space was, worth 100 billion or less. And today we have probably $3.5 trillion of value in the digital asset ecosystem. So that's, 35x, 40x. It's a big move. And a lot of that wealth is really big. And I don't want to say concentrated, but there are, the larger Bitcoin wallets, of course, own bigger chunks of Bitcoin and value. And, I think that they'll, make choices with that value that will help, cement the value of the future value of their assets,
Mm.
which is just to say that it's the value increasing in the space, but it's also the legislators themselves who become younger.
Sure, yeah.
And and this has been the big problem is that we have all these 80-year-old people running the country,
Yeah.
not really dynamic in my view. What does Biden work a 4 hour day? You think about the incredible creativity and energy and everything in the U.S. economy, and it's the president, wouldn't be the CEO of any corporation in America. There's
Yeah.
no chance.
Yeah.
So doesn't really make sense to me. And it'd be great if we had 40-year-old guy running or gal running the show, but there doesn't seem to be anybody on the horizon just yet. I think when that happens, you'll see even a greater explosion. I don't
Mm.
want to say it's completely about age, but I don't know what you've thought. But I really do find that age is a big determinant.
Oh yeah. I mean, from the different folks I've spoken to, different congressmen and regulators and so forth, that is a common theme.
Yeah,
Age is a thing. But to your point, it's fresh blood coming in where there's younger members of Congress who understand technology better and are pushing for regulations and so forth. You got on both sides of the aisle, which I'm really pleased about, Republicans and Democrats. You got Richie Torres,
yeah,
who's
it could be a unifier, right?
yeah,
Yeah,
for
wouldn't
sure.
it be funny if Bitcoin eventually became a unifier of the country?
Mm.
Both sides, right? And everyone talks about how divided the US is now.
Oh yeah. Well, isn't that the
But
saying, fix the
you have
money?
Democrats and Republicans owning Bitcoin, right? It's
Yeah.
not I don't think it's really a partisan issue.
There's a saying, and I don't know who said this, but like fix the money and fix a lot of the problems, right? That divide
Yeah.
us. So on that note, Dan, let's talk about the macro. Fed, uncontrollable debt. It's ballooning like crazy. I'm worried about my daughter's future. Are we going to end up like Argentina? Or are they going to fix this maybe using Bitcoin, maybe using CBDCs, maybe using blockchain technology? I don't know. I would love to get your perspective on that.
Well, I talked about this recently in that Pomp interview I did in New York.
Mm.
I think that all fiat assets are devaluing against the assets in the digital asset ecosystem. So if you look at the S&P or NASDAQ or US bonds or any asset in the fiat world, the dollar, they're down 99% against Bitcoin in the last 10 years.
Mm.
So the existing fiat world is leveraged, right? That's what we're saying. There's lots of fiscal spending. There are lots of bonds, right? Leverage is borrowing, borrowing is bonds and debt. And so the fiat world, the old world, is filled with leverage and debt.
Mm.
The new world has no leverage and no debt. I own, as you know, 24 different businesses in the space through my funds. None of them have debt because no one will lend to anybody in our space.
Mm.
So forget about the fact even that Bitcoin is pure collateral and a higher form of, a digital form of gold and all those other things we talked about earlier. Even forget about that. But I don't see a world where the US or any major country defaults on the debt because that would cause a massive depression. And we went through that in the 30s. I just don't see that happening. There's not going to be a debt jubilee or anything like that. What happens is over time, and it may be 10 years, 20 years, I don't know, all the assets in the old world, fiat assets, fiat currency backed assets, real estate, art, as I mentioned, stocks, bonds, they all continue to go down versus Bitcoin, ETH, and the other quality assets in the digital asset ecosystem. And one of the main reasons is that the supply of Bitcoin is limited.
Mm.
So think about all the assets. You can create more real estate. You can create more bonds. You can create more stock, all of that stuff. You can create more currency. The money supply keeps going up. So all that stuff can go up infinitely. The stuff in our world can't. So, but someone might say, well, there are 20,000 cryptocurrencies. And so the number of cryptocurrencies can continue to go up. That may be true. But as we know, 19,500 of those cryptocurrencies are actually worth zero.
Yeah.
So there is there. You can try to increase the supply, but unless it achieves network effect, it's meaningless. So it's really the top 100 cryptocurrencies at any one time that have real value. And it's right now, it's really only, if you're thinking in a macro terms, really only the top 10. So I guess what I'm saying is that over time, that old world system with central banks, governments, and debt and real estate, all of that stuff, it probably just continues to mosey along, right? It's just that everyone in that world, and this is the key, loses purchasing power to everyone in the new world. So you can see it now. If you bought Bitcoin 10 years ago, you can buy a bigger house than if you had bought the NASDAQ 10 years ago.
Yeah.
Today. Now you have to sell your Bitcoin, which I wouldn't do. But I'm just saying it's the same thing for Ethereum. if you bought Ethereum, 5 years ago, versus buying any asset in the old world 5 years ago, well, you're wealthier certainly in dollar terms today. And so I think that process continues. And there is a slow leak of total value from the old world. So there's, call it $700-800 trillion. Let's just make up a number of value in the old world. And there's 3.5 in our world. So within 10 years, maybe there's 600 trillion in the old world that actually contracts, and there's 100 trillion in our world, right? Or maybe it just stays stagnant, because contraction is not something that people deal with well. So maybe it just increases at a rate of like 1% or something a year, whereas the wealth and value that accumulates in our world increases. Look, I don't think it can continue to do what Bitcoin has done. Bitcoin's done 200% annualized for the last, 10, 12 years. Again, with 7 drawdowns of 70% or whatever it is. So insane volatility. But net, the value accrual has been faster than anything, certainly in the old world. So I don't know if that really, it's a bit of a sort of esoteric kind of concept, and it's very macro, that the leveraged world as a whole, right, devalues against the non-leveraged world.
So based on what you're saying, though, how does RWAs and tokenization play a factor? Because what if you move the bonds, the real estate, and they're moving to fiat currencies on chain, right? Where because everything is real time, settled real time, you can burn possible fiat tokens. I don't know if they actually burn the supply, right? But there's these possibilities. What do you think about that? Does that help?
I think that's a fascinating idea. And that's many steps ahead of where we are today. But theoretically, you're absolutely right. You're right that maybe that's what happens. I don't know how. I think these things sort of still have to be worked out in the sense that if you're able to put property on a token, when you burn it, does it mean you destroy do you have to take the house down or take the property down? I don't know. But you're right. There could be. But the problem is that extinguishing debt tends to be very contractionary. This is very macro. And my guess is that it just stays flat, right? Or increases at a very slow rate. I don't know that extinguishing debt, but you're right. I don't know how that would work, but it's certainly an interesting idea that you suggest.
We'll have to see how things play out. Final question here before I let you go. 10T Holdings. Over the years, I've seen reports of you guys raising lots of capital. I'd love to get an idea of AUM, what's new, any new projects you're investing in.
Yeah, the funds have about 1.2 billion under management. We've invested in 24, actually now 25 different businesses. My fourth fund under the heading of One Roundtable Partners. Again, let me just be clear. One RT has 17 employees. All 17 employees are also employees of 10T Holdings. I've just changed the name of the management company. And I've been able, as a result, to bring in some very high quality partners. Tad Smith and Randy Little have joined me, Eric Vincent, and of course, Michael Dubelier is the chairman. We've got a great team of analysts. And we're actually raising money right now. And we had some money come in already that we've invested. So we've already made 5 small investments. The secondary market right now is incredibly cheap, incredibly in the growth space. So, as far as I know, we are still the only growth equity fund exclusively focused on, digital assets, crypto, blockchain, however you want to, describe it, Web3. And I think, and I don't know that I have a great answer for this, but there are most of the money in the space is in venture and in the venture funds. Tremendous amount of funds, number of funds, lots of capital. But the growth space, which sort of B and C and companies, making up $50, $100 million plus kind of a year in revenue, there just isn't as strong an interest. And so some of these companies that were funded in 21 at very high multiples, you can buy their stock at very reasonable multiples today in the secondary market. So I think it's just, I don't know how long the opportunity is going to last, but, just as an example, Coinbase at the low is $40 and is what, 250 today?
Yeah.
So that's a liquid stock. It's common, but, we have companies who are going to do, near record quarter revenues in Q1, and yet their stock is trading still, I don't want to say at the lows, but in the secondary market, the stock is trading very low. Now, we don't think the company is worth what those values are. We think the company is worth much higher values, but there are still distressed sellers and people who need liquidity selling the equity in some of the companies that we're interested in. So I've just never seen such a disconnect, and the companies have never been able to be purchased at these kinds of values. So it's a little bit of a bonanza for us.
Dan, I kept you over time. I appreciate you.
Okay.
Thank you so much for joining me, and always a
My
pleasure.
pleasure. Yeah, thank you.